Happy Friday, folks. Welcome to the stream. Yes, I have actually gone long Bitcoin going into this weekend. I'm not playing a hedge against the wars or anything. I'm not playing a hedge. That is not what I'm doing. Wars or anything. I'm not playing a hedge. That is not what I'm doing. Wars or anything. I'm not playing. We'll do that in just a second. Hang on. What I'm doing. Wars or anything. We'll do audio thing second. All right. So yeah. Also went long TLT. We'll do audio thing second. All right. As well. So yeah. Very active long TLT. I got to talk about that as well. Yeah. Sorry about that. Very active VIX as well. I got to talk about that as well. Yeah. Sorry about that. Very active VIX as well. I got to get into it as well. Hang on till I. Very active VIX as well. I got to get into it as well. Hang on till I. Very active VIX as well. I got to get into it as well. Hang on till I. Very active VIX as well. I got to get into it as well. Hang on. The very active VIX is I got to get into it. Hang on till I. Test. All right. Well, thanks for joining me. Sorry about that intro. I think must have had a couple of windows open. I think we're good now. Let's do a little quick check of all the things. Looks good. All right. What's up? Good to see you guys. Hope you had a good week. It's been an interesting week, for sure. Had some highs and lows. I gotta tell you something. I kind of had a little bit of a feel for the market. I wasn't feeling too good earlier this week. Made a few mistakes, but I'm ending the week on some pretty high conviction. To not bury the lead, yes, actually, Bitcoin, like I said last week, surprise, surprise for me, who has hitherto absolutely railed on Sailor and MicroStrategy, actually took a long. And even though I really don't like this instrument, but the long was from here, it was the spike setup on Tuesday of last week. Not stopped out yet. It hit a resistance, the 50% retracement at 147. I decided just to kind of hang out for this because what I'm playing now is a Bitcoin relief rally. And on the daily, this is a classic Ichimoku setup for basically when you start to see a little, back up a little bit. So daily Ichimoku is what I look at when I'm gauging trend sentiment for Bitcoin, have for many years. And this thing doesn't get bullish until price gets well above the cloud at the same time that momentum gets above the cloud. But things have to happen first. And so we've had this little quick move up here on the last couple of days, last weeks. and it pulled back to my quintessential support level of 50%. And so this is the first push to potentially get it up to the next 50% level, which is at 79K. And that's the relief rally that I'm looking for right now. Yeah, get all the symbols in. We'll take a look at them. Your first Apex payout today. Is that a prop firm? I'm genuinely curious. I don't want to misspeak, but I don't know many people that have good things to say about prop firms. But if you're getting paid, that would be a data point in that assessment. So we'll talk more about Bitcoin in a second, but we got to talk about the market. And when we talk about the market, ignore my futures trading levels. This is where the futures, ES futures, S&P 500 futures are going to close the weekend. And yeah, it's right there on the cusp. Actually, futures are open for just a little bit longer. It actually has a chance to get out on the bearish side of the cut. Look how close that is. But what I'm really looking at is VIX. And a lot of people say you can't time the market. Time in the market beats time in the market. Well, I don't want to feel like I'm wasting my life here, but in the history of the market, if you watch the price action of the VIX, the price action itself of the fear index, that becomes an important timing element. And it also tells you the direction of things are going, as well as people are positioning themselves. And so earlier on in this week, March 4th, which is Wednesday, March 4th, it's a word that pushes things forward. That held, again, a 50% level. Also is backed up by Ichimoku, but that's because Ichimoku is backed up 50%. But you can always look for halfway points of past VIX movements to find support and resistance inflection points. And another concept that I always look for is bar closings. And so this week, when you came in on Tuesday with a little bit of spike of volatility, normally if you're going to see that volatility decline very quickly, it's just going to come right back down. Market's going to keep going up. But what was different this week, this is the key thing, key that you want to look for, is that it formed this 50% from the last major down move, October of 2025, that defines, let's just start over. Let's just draw the charts right here, because this is important. I want you guys to know this. I talk about this whenever it becomes relevant from year to year as I've been doing this, but this really helps you time the market and understand where it's going more than any other analysis that I've ever found. And so from the VIX high of October down to the low of December, the end of the year, that sets up a VIX level of 2119. And so we had the volatility move up here. That's fine. That's what it does. It spikes. But the fact that it came here and closed to hold that level, you can imply that you're going to get more implied volatility. You can imply that fear is going to increase. And now that it closed above that October high, we're going to get more volatility is incoming. And this is reflexive. It's people buying more put protection going into the weekend. I was watching this all day today to see where this thing would close. And then if we go back and look at the SPY, has the SPY closed bearish? Has the SPY closed below the Ichimoku cloud with momentum? No, not yet. So what people are basically betting on is that something's going to happen this weekend. Well, let's put it this way. They're not betting on it. They're hedging against it by buying protection in puts, the market as a whole. And yeah, so that's what today was all about. Today was all about not sure what's going to happen over the weekend. We got some fears and stuff like that. Is the audio really jank, or was that just to begin with sacred? I think I fixed it. Or do I have an echo now? I think that was 401. Okay, we're good on that, right? Right, chat. All right. So let's see. Yeah. COG spike alert. Okay, we'll look at that in just a second. Let's talk about some other trades for the week. A little update on last week's setup. Oh, I promised I'd talk about Bitcoin because that's the title of it. So we'll expand upon it just a little bit more. At some point here, we were going to get a relief rally, and the best time to look for it, no matter how you slice it, at a multitude, well, 3 confluences of levels. We are flirting around, we're below, but we're flirting around the 50% retracement. It's actually closed to hold on the upside here, so that's not particularly bullish. But it's also a major volume profile level that it's holding from 2024. So this is where everyone basically was positioned 2 years ago. And that is what it is trying to hold right now, along with the 200 EMA. Now, 200 EMA, I don't really pay that much attention to, but there's 2 sides of the coin here. This is definitely bearish. We definitely have to acknowledge that the cycle high was 126K, and we are now in a Bitcoin bear cycle. It just is. Now, it doesn't do much for us now to try to bet on it going down. I think at least half of the move is gone from the all-time high false breakout around 126. So the meat of shorting it at this point is definitely exhausted from a trading standpoint. But this is also the time when you can expect to see some kind of significant relief rally at some point. Okay. And I'm watching sentiment pretty clearly, but clearly that would bring us back if we get a relief rally here. If it holds this support, holds the middle of the consolidation here and comes up, that would be a textbook move, but nothing's ever textbook. But that's what I'm positioned for going into this weekend. Strong conviction, weekly held. We'll put it that way. I still am looking for a full, and when I say full, I mean the full bear retrace, which would be a 60% move from the all-time high down to the ETF buying level of 42. May not happen. I saw some, I like to read crypto Twitter to kind of gauge the sentiment. And this week was a lot of STRC, a lot of MicroStrategy preferred bull posting, like a ton, like a Spidey sense tingling amount of preferred MicroStrategy share bull posting about how it's so risk-free. It's like cash. Why would you have your money in the bank and only earning 3% when you could earn 1.5% backed by the best performing asset in history, 2x, 2.5x, capitalized, $2.5 billion in cash dividends that is set aside to pay for that. I'm going to time my MicroStrategy. Like I said, it did its own little muted relief rally here, but I'm going to time the MicroStrategy position on Bitcoin itself, because MicroStrategy is basically a leveraged Bitcoin position. Not going to touch their preferreds. That is yield farming for people that don't understand risk. And I did a whole deep dive on that today. I made a PowerPoint. I've been using my bot that's hooked into my Discord now, my OpenClaw. Been doing a lot of work on that this week, a lot of back testing of strategies. Still have my spike strategy, still took a few today. The spike strategies that came up today, we'll talk about. But if you are on my Discord, go into either crypto trading or AI. I took links in the crypto trading. I had to do a breakdown of the bull posting of STRC and like what the preferreds actually mean. As well as how capitalized are they? I mean, the TLDR is MicroStrategy is positioned to survive an extended bear market. Otherwise, they wouldn't have raised that $2.5 billion in cash. That kind of negates the whole narrative. If you guys, the narrative, I heard, one of these, I heard a remix of Sailor talking about how, people keep their money in cash. We call those people poor. And yeah, now you're holding a bunch of cash. So what does that say? Well, it says that their financial quants, their models, told them that they needed to have $2.5 billion in cash to cover their obligations out to about 3 to 5 years even, if Bitcoin enters a sustained bearish cycle. And they probably put that chance low, 20 to 30%, but not zero. And so they're just being financially responsible. It erodes their narrative, but that's why they're bull posting the STRC now, selling the revenue. So, excuse me, not the revenue, but they're selling the yield to people to generate revenue to then buy Bitcoin on this dip. That's the plan. That's the trade. The trade now is get people to give them cash because they can't sell common equity anymore, to buy this dip and model their solvency for 3 to 5 years of an extended bear market if it happens. And they probably put that at about 20-30% chance likelihood happening. That's what it basically models out to. So that they don't have to sell any Bitcoin at all. That's the plan. That's the trade. So you just kind of have to understand that going in that, that's the trade that you're taking. And I mean, the problem that I see when I look at STRC that I've maybe people wonder about is when you talk about it being like cash, you can just already see twice already since inception, for like in November when you had a big dip, and then February when you had a big dip, your like cash went down almost either 10% or 7%. You basically can plan to lose in the span of a few weeks, one whole year's worth of returns in just STRC. So everyone's looking at the par value sitting at 100 right now. I'm just too risk conscious to not acknowledge that, people need to understand what they're getting themselves into. It's sure, buy it if you want, but understand exactly what you're buying. You're not buying you're not buying a savings account. You're not buying a CD. You're buying essentially corporate debt, like a corporate bond. It's basically what you're buying with their preferreds. The only advantages is if and when there's liquidation, you get money before the common shareholders do, which they get basically nothing. And probably the downside is about 50, but not to FUD it too much, but that's just the reality of it. All right, so Costco today fired a really good spike on earnings. Loved it, picked up some more. I don't think that if America goes into a deep war that Costco is going to go out of business. I know I'm doing my part to keep them in business, going about once a week. But this spike happened right on a 50% level. Triggered on the Archon scanner, by the way. It's free. Chartis.io. And it was actually one of the very, very high conviction ones. Because high ATR clearance and earnings. In fact, earnings, by the way, for you guys that are using this, I try to keep this in the Discord, but it probably gets lost. Statistically, you kind of have to jump the earnings ones because oftentimes they do like Costco did. The 930 spike, that's what this bar is right here, and it just runs. Now, that's not every time. Hashtag nothing's ever 100%, but more often than not, that is what earnings do, and that's what ends up being the winners. If you wait for the pullback, like sometimes I have traditionally done, and that was on the AWK, which I also took today, American Waterworks. That actually, a normal one, non-earning spike, that's when I typically wait for it to pull back to that median line for an entry. Lowers the risk. Stop is always below that day's low. Took a loss, took a few losses to this week on, had to close out the AWE, but was still able to hold on to Dollar General, another high conviction trade of mine. And I fumbled the ball badly on CrowdStrike. Now, this is an update from last week. IBM, yeah, if you guys were here last week, turns out the SaaSpocalypse is greatly exaggerated. I even saw something this week. Let me find it. I even saw something this week about how hiring for programmers is actually up. WTF. Citadel Securities published this graph showing a strange phenomenon. Strange for people that thought that what the market thinks is always true. Job postings for software engineers are actually seeing a massive spike. Jevons paradox. I don't know Jevons paradox. When AI makes code, is this like a new paradox? Jevons paradox. When AI makes coding cheaper, companies actually may need a lot more software engineers, more fewer. Okay, we'll see if that catches on. That's obviously just can't. This paradox, this meme came out this year. When software is cheaper to build, companies naturally want to build a lot more. I've been building software. I've been loving it. That's what I've been using my OpenClaw for sure. But yeah, the rumors of again, these things are never super obvious because everyone thinks that what the market is saying, in other words, the software as a service companies are dead. But I definitely felt that IBM was unfairly maligned by saying that, Anthropic can now, or Claude can now streamline COBOL. It's going to put IBM out of business. I don't think so. I think that I don't know. I think that was one of those news events that you take in and you're like, wait, is this really true? Did price come down to a support? Yes. Is this the meme of the year driving prices either up or down? Yes. Let's go against what the crowd is doing. That's IBM. The other one I was looking at was CrowdStrike. And I fumbled the ball on this one because, oh man, I really missed this one because this one also was, I misdrew the trend. See, sometimes things can be nebulous, and even though I've been doing this for years, I tried to grab the 50% of the broad trend from January to the high, but really what I should have preferred is the volume profile level from 2024 through 2025, and that trend starting in 2024. And that would have given us it happened the same time as IBM, except I was looking for maybe this to be like a second dip. I was looking for a little bit lower, but screw the ball on that. Actually had a 30-minute bearish spike on this one that I took with a put, had to close it, fortunately, because I was trying to force the market to get down to my level. But instead, this would have been the time to go long on the breakout there. So just sharing with my L's. I'm not perfect. Always trying to improve. But I got IBM. IBM's good. Like I said, added to Costco and picked up AWK, closed out AME. Yeah, that was this week. So doing okay, still positive on the year. And here's the other high conviction trade. Make sure you get symbols in. Let me check a bunch of. I've been rambling for a second. So we got to talk about this. Okay, got it. All right. We'll look at all these. Yes, indeed. Yes, indeed. Thank you. Thank you for checking. All right. I just made a post about this before the close because right here, I still have this legacy spike system, which I need to replace because apparently TradingView has depreciated webhooks that used to go to my Discord, or I need to reset it. But I need to get these in to Discord again. But I saw this come up. I've been making a point to check these old spikes. Again, like I said, Costco came up. Been watching Costco because I've been long Costco for years. And always looking to add to that. TLT. What is TLT? TLT is the 20-year plus Treasury bond ETF. That's like the quintessential bond thing to put in your portfolio. Okay. Boring bonds. Hasn't done anything in a very long time. Who wants bonds? They don't move. Bonds are for old people, right? Well, today, right here towards the end of the day, we got a 2-hour spike that triggered that happens to be right at a 50% level. That's a pretty good trend pullback, honestly, on this. It's pretty tradable. All right. I know where my risk is. If we actually break down the Ichimoku goes bearish, the spike low gets broken. That's pretty good. So it's a really good timing, low risk entry. But what's the bigger picture? What's the bigger picture here? Daily, not big enough. Weekly. Now, if you're a seasoned trader, and some of you I know are, and you look at something like this, you should know from years and years and years that price abhors a consolidation. The longer something consolidates, the bigger the move is going to be. You just don't know which direction. Could be up or down. That's kind of the problem. You know that it's going to break out bigly. You just don't know which side. So it's basically a 50-50 bet, but you know it's going to be big when it does. But it's bonds, right? Nobody bets on bonds. Don't move. Bonds don't move. You're right. And that's what most people are assuming now, because bonds have not moved since October of 2022. In fact, this is the longest bear to consolidation period, almost 6 years, almost six, yeah, exactly 6 years, considering the top was in the March of 2020. 6 years, longest period of bearishness and consolidation in TLT's history. And TLT can move. Doesn't happen often. It's like a generational kind of thing. But from the last breakout from a consolidation that happened in March of 2019 up to a year, it's about a 43% increase on TLT bonds. Now, that required a little thing happening, but it also required interest rates getting just slammed, which drove the price of bonds up. And also, people ran into it as a flight to safety of bonds, although they got killed because people that were holding bonds got killed when interest rates went down. That sucked. And it's just kind of died ever since. But you know what the beauty of this is? Let me pull this up. The beauty of this is, to me, when I'm looking to play this, and I am playing this, I did take a position on it. I bought calls. I bought leap calls. That means out to January 2027. Is that IV, implied volatility, the price of options themselves, are at dirt cheap prices relative to itself. And there's a little indicator down here that shows color coded. It's low. It's definitely below average. Some of the lowest it's been really in a long time. And IV can definitely increase, giving another pump to the options. So no one is currently betting that TLT is going to move. No one is betting on it. And so a trade that I can be in that nobody else is in, that I have a timing element, that I know when I'm wrong and I can start to de-risk. In other words, if next week this does not actually start its move, then I got plenty of premium on those calls to see if I want to de-risk it or not. So I like this a lot. And I've been watching TLT for a long time, been biding my time. I tried to catch the bottom a few years ago. Haven't touched it since. So it's not a revenge trade anyway. It's just no one is betting on this thing breaking out trade. And I like it. I like it. So going into the weekend, I talked to my open claw about this, and he said, "Oh, are you positioning for a recession?" I was like, "No, I don't do that. I always assume things are going to be fine." Market's priced in a lot of fear. Look, war. I could bring a, I don't need to use, I would bring in my bot, but they're still, LLMs are still kind of slow. I can just tell you from experience. Wars don't make the market go down. Uncertainty makes the market go down. And right now, that's what the market is facing. It's like, what's going to happen? What is oil going to do? Are we going to reopen the Strait of Hormuz? Oil doing some interesting things for sure. Very bullish now, conclusively bullish. But this is, of course, a supply shock. I had someone ask me today, how does this relate to the business cycle? Because typically when oil and energy stocks are leading, that is a sign of the market topping out. And so if this is a quick move up on oil, then it's just a supply shock issue. But if this becomes a sustained trend, then it could actually start get into the top of the market, the top of the business, and top of the stock market cycle. So the sector rotation right now, which I haven't done a video about, I need to sit down and actually compose it because it has a lot of moving parts. TLDR, mid to late cycle. That means basically nothing. I know. We're not at the top yet, according to the business and market cycle. But let's do a quick look at it. The sectors. Trying to time that recession. Time that market. We need to be looking at the VIX. Energy is leading, materials and industrials and staples. Defensive. Energy, materials, consumer staples, and healthcare and utilities. Orange means we are, according to sector rotation, potentially topping out. That is what the sector rotation says. But also, that's what the chart says. If I was going to short the market, it would be, I think I talked about this last week. Someone came in and asked about NASDAQ puts. If you took them, good for you. Wednesday of not this week, but last week, that would have been a really good resistance hit to taking the bit. Still just hasn't broken down yet. And I just, it's so hard for me to go into put protection because I saw a metric this week. Let me see if I can find it. Ooh. Yeah, this was from Wednesday of this week. So right now, investors now hold the most put protection in all of history. Oh man, that makes it really hard for me as a contrarian to start buying puts. It's really hard. But I bet that actually, I can almost guarantee that increase because of VIX going up here at the end. And VIX closing above the October high. So got to go into the weekend, if I'm being disciplined and honest with what I know about VIX structure, is we could very well get a push up to 3683, which would mean the market should dip. And then when VIX hits 3683, if the market, S&P 500, hits a level at the same time, that's like the perfect setup to go long. That is where you deploy your capital. And as I said, market is not going down on war. It's going down on uncertainty. And so when that uncertainty evaporates, in other words, peace is announced, you start seeing some back channel peace deals, which you haven't seen yet. When major combat operations are over, when you have, Trump do some kind of a mission accomplished carrier thing like Bush did 20 years ago. Has it been 20 years? Damn, it's been 20 years almost. Yeah. Wow. Getting old. When they do that, you can almost guarantee market will move because the uncertainty's over. Let's go. But I'm very fond of Warren Buffett. He's credited with it, talking about how, well, when you're facing threat of nuclear war, you might as well buy stocks because if the world ends, doesn't matter anyway. But if the world doesn't end, you're long into the bull, the relief rally, the rally, basically. So we shall see. We shall see. To kind of circle back, poor Bitcoin. Poor Bitcoin. But really, gold too. Nothing's really the safe haven narratives. They're just not vibing really with what's going on. The best thing I can say if I was to attach a narrative to gold and silver, which by the way are not dead. Silver did hit a resistance though this week, or actually hit it on Friday and then topped out on Monday. So silver's it is actually kind of looking a little over. Yeah, it could get back up here. Anything can happen, but that's a pretty solid hit there. And gold's missing it, but it's not over. It's not over. It's not over until we get on the bearish side of the cloud of the move. But every day that it doesn't gets us closer to that. Not over. But again, the safe haven trades, I think all the central banks just basically front ran it. I think everybody knew. Not everybody knew, but I think that now in hindsight, it's kind of obvious that the central banks, in preparation for instability, in response to de-dollarization of Russia, etc., we can now backwards craft the narrative that they started buying gold. Doesn't help us now. Definitely doesn't help us now. I mean, I'm not going to sit here and tell you that's what you need to do, especially now, because not with my experience looking at charts like this. This is getting into shitcoin territory. Just you can only lose at this point. Just, I mean, maybe you'll get a little bit more out of it, but like, I mean, yeah, you missed the move basically on gold and silver at this point. No matter what people tell you, you missed it. This kind of volatility has only one end. You just don't know when, and you don't know from what price. But like anyone entering it right now is just entering into, the next generation of bag holding of precious metals for when the cycle kind of filters off. All right, let's see. Okay, into the second half. Let's solve the positions then. Let's start looking at yours. You got symbols to look at. Let's go through them. All right. What did we not cover? KOG. I like it when you start speaking my language. Must be a European stock. Is it Kroger or Königsberg Gruppen? Königsberg Gruppen? That's bad German. That is a false breakout. Yeah. That is a weekly classic false breakout. Yeah. Mm-hmm. It's also probably a spike on the daily too. Yep. A little weak, but it is. Yep. That's a false breakout. Good eye there. Outshine. If you want to short something, if you want to bet on something going down, I don't like buying just puts on like NASDAQ or SPY. Nobody seems to have a very good track record on doing that. What I want to look for if I want to bet on something going down is something that's showing some weakness. And that is the kind of weakness that you want to see. It's strength in that it's a very nice little pullback up to the top there, but that is a first sign of weakness. It should have gone. It should have gone. And you got a week that tried to punch above it this week and closed below it. You know where your risk is. You know that your risk is the actual breakout. And meanwhile, you're trying to play it down for the double top. So yeah, that gets noted. I'll see. It's a European stock. I don't know if I can do it easily in my accounts, but for your euros, that's a short. Let's see. Yeah. We talked about MicroStrategy. We talked about Bitcoin. I'm long both. I am, of course, long XMR. Not much changes, just to kind of reiterate my thesis on Monero. Monero, you should expect to have a slow appreciation with the adoption. There we go. Over years of time, and sporadically blessing you with periods of people converting large quantities of ill-gotten Bitcoin into a relatively illiquid Monero market, giving you big, giant yields. That's the sentiment for Monero. But overall, this week, and I always bring this up every time we see a big move. Not every time, but most every time that we see a big move in the crypto space. And now that I've been working on my trading bot, trying to try some strategies with crypto, seeing if all the technical stuff works, trying to find some edge. By the way, it's hard because all the easy money is taken when you see a big down day. And this has happened for years. This has been happening for years, guys. Since I started shilling back in 2023, 3 years ago, I would notice whenever crypto market down, there would be one winner that would be green, holding its value, outperforming the rest, and that would be XMR USD. That is because people actually use it. It actually has a use case as private money. Bitcoin's got its case. It's digital gold. Well, maybe not digital gold. It's digital capital. There we go. There we go. But when everything else is going down, Monero is usually holding its value, and that makes it go up. And then again, the relative performance, like we check in on XMR BTC, I always get accused of looking at an arbitrary time frame. Whenever they want to poo-poo it, they say, well, look at it back to 2017. Actually, that is a boo. Hold on. So we go back to the start of Monero to here versus Bitcoin. Bitcoin's outperforming it by 49%. What do they do with Ethereum? Yes. Ethereum's done pretty good, though, right? Yeah. Ethereum's actually outperformed Bitcoin over its history. But if we just look at anything else, just off the top of my head, ADA, because it's A, BTC, Cardano. It's down about the same, 40-something percent. That's the arbitrary time frame they will look at. Foregoing the whole past performance doesn't indicate future results. But there's key things that have happened. Number one, the last bear market cycle, which was 2022, that was about 130, 140% appreciation on Bitcoin. Notice anything about how it's an indicator of a bear market in crypto and what Monero does relative to Bitcoin? By either holding its value or going up, it outperforms. And the quintessential this going to make Bitcoin moon narrative of the ETF launched about the first week of January 2024. And so since that time, that arbitrary time frame, Monero has actually outperformed Bitcoin by 40%. Throw out all the yeets and stuff like that. On a consistent basis, it's outperformed by 40%. And when did I start really getting interested? Well, I've been talking to it for the last 3 years. Doing pretty well. So own some Monero, bro. Or don't buy it, because governments don't want you to have it. It's bad. It's bad. You don't need privacy in your money. You need to have everything KYC and tracked, because that makes you a good crypto citizen, doesn't it? Let's bend over and have public ledgers, because that's what makes the corporate Ponzi's happy. All right. Hymns, I still don't want unless it comes down to 874. Kava. I think we looked at this. It kissed and ran from the 50% retracement level. Looks like it broke above it. That is bullish. That is bullish. If we go to the daily, yeah, it's already breaking out on the daily. Now you could probably look for a pullback to 72.88. It's pretty good. Yeah, that's bullish. Don't know what to do. This, by the way, is sort of the inflection that I'm looking for on Bitcoin on the daily. You know, you have Bitcoin, which all the crypto is basically doing is you're coming out of the consolidation. You got the pump up, and now you're looking for it to hold there. And so that's, if you think about it, that's essentially what you're seeing there. You have a little pump up, holds the KS, the HMU KS, and then goes and traverses into the cloud. So yeah, bullish on that. TXT Textron. Oh, that looks bullish. I got a looks like a volume profile level marked off there. That is a really good 50% level. This is a weekly, so it's already gone. But you know, well, like most things, April of last year, 2025. Yeah, but solid. Proof of concept of 50% retracements there, 58.80. That's bullish. And then you've got, yeah, even though this has come back inside the range, this is still a validated breakout. So TXT bullish. Marathon, very bearish. This, I was talking to somebody about this week. You got a volume profile level at 944. 10 is that magic number for institutional investment, where it goes from, okay, institutions want to hold it, to this is junk. And you have clear response to that 944 level, and then 2 weeks of rejecting it. In fact, when I was talking about it this week with a friend, it was about Tuesday or Wednesday, and it was up at this level. And he was fortunately looking to divest from it because of the fact they're selling their Bitcoin. But I had a point I made about that on Twitter this week. I'm taking a dig at it, because as a trader, I can recognize a trade. good or bad. And, this week, Marathon updated its 10K to allow its Bitcoin reserve sales beginning this year. And it started selling Bitcoin to preserve financial flexibility, which that's a nice word for we're probably going to start turning some of our data centers over to AI. Company currently holds 53,000. But here's the thing. I have a memory. I have a very good market memory. I don't remember much things, but I do remember a lot of things market memory wise. And I remember November, November 2024, when the CEO of Mara was going on TV, CNBC, and saying that anybody selling Bitcoin right now is selling into a market where there's ample demand from institutions. I'm so sick of hearing more institutions. Here's why I don't like it. I don't like the idea that people think that first of all, they know what institutions do. And second of all, they think institutions are any better than they are. They're still made up of people. They still do stupid things sometimes. They're still traders. They just do it with more zeros than you or I, and a little bit more oversight and fiduciary responsibility. And when I look at, they made their HODL policy announcement that they were going to be buying Bitcoin back in July of 2024. And so and then that article, or excuse me, that CNBC interview was when it was about 97K Bitcoin. That's basically a trader bragging. Now, what should you be doing when you're bragging? If you're a trader, you should be taking profits. Good enough to screenshot, good enough to take profit. Well, you didn't. And now, now that trader is now back at break even. So what do we do oftentimes as traders? We put our stops at break even, don't we? Well, there you go. Now the guy got into it a little bit midway through the trend. He started bragging about it on the way up, really excited about his position, did not take profit. And now he's back at break even, and he's starting to set himself up for an exit. I can see the trade. I can see the trade management. It's just, he's done it with more zeros than you or I. That's all it is. So that's Mara right now. Would not touch. Would not touch. I don't think they're in very good shape. Normally, I love buying stuff that people don't want to buy, but that is not what MicroStrategy or Bitcoin is doing, where they're forming a bottom and having supports underneath them. Marathon had a chance to hold its bottom, and it broke below it. Now it's pulled up and held it from the upper side. Nobody bought it. It held the resistance. Not good. Catch it on the upswing if you want to, but that's bad. That's just hella bad. That price action like there. So let's see. Duolingo. Well, that's I think that's a SaaS is dead narrative that is true, because I mean, look, the IBM and the CrowdStrike, I think, are misaligned. I think they have much broader businesses than AI is going to replace. But Fiverr, Duolingo, Intuit, all these like straight single product software as a service companies, I don't see these as opportunities. Maybe I'm wrong, but I'm not playing these. No, it's just my plays for this year's narrative, contrarian narrative, is IBM and CrowdStrike, not single product software companies, which are deeply, deeply threatened. It means they're cheap, but doesn't mean I want them. I'd rather own a much broader, more well-capitalized company that can possibly survive. You might make some money. I already got an ADP. ADP is possibly, I have this marked off right here, but the reason I didn't choose ADP when I was looking at this last week for the contrarian narrative, it is hitting an objectively good level, 215. It is holding it. In fact, you have a nice little spike of it right there. This will probably survive. The reason I didn't pick this was because this is already trending bearish on the weekly. You'd have to go up to the monthly to really justify your trade, which is there. It's there, to be fair. So ADP is okay. It's okay, but it wasn't a superior trade like IBM or CrowdStrike to play this narrative. And in fact, I think that that's borne out because if we take our entry into that last week, coming off of its level, the level itself, IBM is up almost 16% off of that big dip. ADP is up off its level about 5%, and CrowdStrike is up off of its, we'll call it the volume profile level, 18%. So there you go. And this goes back to what are you looking at on the broader structure, just defined by the Ichimoku on the weekly. That was why I picked IBM and CrowdStrike. They could hit their level and stay neutral, whereas ADP is already down here in a established bearish trend. So could work, but IBM, CrowdStrike are how I'm playing this narrative. ADP, good luck. IBM, talked about that. UNH is a bag hole from last year. I mean, what more can I say? I'm still holding out from the 295 volume profile. We're just gonna hodl this, and we're gonna wait. It is bearish on the monthly. A little dicey. We'll see. We're just gonna hang on to it, collect our little paltry dividend while we sit here in this stock. I always try to think, would the capital be better elsewhere? Go away, dividend. You're small. I don't care about it. Really? There we go. I always try to think, would the capital be better elsewhere? And within that, what is the dividend yield on UNH? As long as it holds, I am collecting. Oh, actually, that's really good. No, wait, no, it's not. 3.06. So a little less than a money market with some upside. So yeah, actually, that kind of sucks. I need to really actually think about UNH. Not married to it, but it's like it's poke it with a stick meme, isn't it? All right, let's see. Monster. You know what? One of the best assets to have owned and it continues to be over the last many years is sugar water. Just Monster, Celsius. Wait, no, that's not the crypto. CELH. Actually, Celsius is kind of falling off. That was 2024's craziness. That's actually an interesting. Well, it kind of missed it there, but that's a short here at the end of the year last year. Missed that. Okay, but Monster, the one in question, the sugar water in question, the soft drug of whatever all those additives are that I did used to love White Monster, but that stuff made me feel weird. It was delicious and it kind of made me feel good, but White Monster is I can understand why people think it's peak beverage, but yeah, it makes it feel weird. So unfortunately cannot enjoy that. 65.35. We'll see if it holds that pullback. And do we have some volume profile support? Yeah, we do. Yeah, of course we got there on the past all-time high range right there. So yeah, I would look for that on the pullback if you want to get long that. It's not good. Not bad. Let's see. Yeah, you second calling Monster. Salesforce. Salesforce, I said no. Salesforce again, yeah. So again, this is again a level where I marked off saying like, okay, is the SaaSpocalypse really true? I didn't find a level, and I actually set an alert at 160. We can try it at 160, but that was again a single product company, single software product company, no diversification. I can't build my own Salesforce app. First of all, I don't need to. I don't do sales. But I've talked to people in sales that have, that understand working Salesforce, that are now working on their open call agents. And they're like, I can just build myself my own sales pipeline. Just if the only thing that's protecting Salesforce right now, this is from inside anecdotal knowledge for people that use the software, is the fact that they can't get their data out. They have so much data, so much baked in, all their sales pipeline. I don't know how it works exactly, but the friction is that they have so much invested in time and data and workflow into Salesforce they can't leave. But that's not much of a moat. And when you think about these companies, as I am, what is the moat? The reason I picked IBM is because they're more than just a COBOL uh, support company. They're IBM. Really, when you talk about AI, they're kind of at they were the ones that made the first computer, the Deep Blue, that could beat a human in chess. I don't know this for sure, but they've got to have something cooking that's going to play a part. Um, so we'll see. On that topic, though, still things that people haven't asked about. Intel, good, and the corollary to Intel is AMD, which looking for a pullback on 170, 178. That's a hardware play. But all this stuff is tech. Nvidia. Just a quick recap. You got more symbols? Put it in. We're gonna kind of close it out. Nvidia is not looking good. That's someone asked me maybe a stream or two ago if they should short Nvidia. I said you should be short if you're going to, from back around the December level, which also last week it came up to test. This is poised for some kind of a pullback, and that's not even going to be a pullback that I would want, because when tech stocks pull back, they pull back hard. So there's a lot of structural bearishness right in here. I still own shares and I own a lot. I own it. My cost basis is way back here, so I'm not worried about it. I'm not selling it. Company's not going to go out of business, but I would be looking for a pullback. And if I am going to look for a pullback on Nvidia, it's going to be a deep one. I don't even start getting interested in a pullback on a tech stock until it's down 50%. Anytime people ask me, "Hey, do you want this tech stock?" I'm like, "Well, is it pullback? Is it half off? Well, pull back 10%. Nope. Nope. Have some imagination. 1150. 1150. I would want Nvidia. That actually flips it to the bear side. It's just it's either 150 or 150 or 111. I'd rather have 111. I'd rather catch a bounce to there. I put a limit order there, wait for Trump to tweet something, wait for something bad to happen in the world, and pick it up there. Just like the time to pick it up was April last year, when it pulled back to the bottom side of the cloud and did not give you any risk of breaking the bullish trend. If it pulled back to here, there is an argument to be made, because that would keep the bull trend intact at 150. All right, that'd be pretty good. 150 would be pretty good. You get down to 111, it's getting a little dead. That's a big deep pullback. Let's see what else. Waste management, by the way. I don't know if anyone listens to me or not, but this is among my favorite stocks to own for basically all my life, or since I started trading back around 29, back even before I started getting professional about it. Waste management is it just goes up into the right. And this week broke out, solid breakout, as I would expect it to just continue to be good. Eli Lilly, also another favorite stock. It's hesitating, but came back to retest for an all-time high. That's good. That's good. That's a healthcare play. Kroger, another favorite stock of mine. Just not quite false breakout yet. Nope. Just it's kissing the high. It's kissing it. I almost lightened up down here, but again, looking for the Ichimoku to really confirm or reject to hold the trend. Momentum did not get weak. Hodled, yes. Let's see. Acre. That's the breakout. That's on a weekly. Yesterday, last week, not yesterday. So 3 weeks ago, middle of February, you had price close right at the level. That told you it knew the levels there. Let's do down the daily. Boom to boom. Confirmed breakout. You assume it's going higher. No false breakout there. Carvana. This, I've got it marked off. That's the 50% retracement plus a volume profile at this level. You got a spike. Oh, hello. You know where your risk is. I think I was a couple of live streams ago. We must have been talking about it because I haven't marked off this level. This is some price structure response to it. I like it. I like it. It'll be worth it. That could definitely be worth it. Yeah, good call. Good call, String. Good call, chat. RSG. I don't think so. Republic Services? No. And here's why. This dichotomy, or sometimes triplecotomy, has come up a couple times. I only want the best stock. This has come up a couple of times when you talk about when I've talked in past streams about cruise lines. So yeah, 3 major cruise lines: NCLH, Norwegian, you've got Carnival, and you've got Royal. Okay, and back in 2020, you had everything go bleh in cruise lines because of COVID. Okay, and so you had Royal Caribbean off that low do a recovery of about 400%. Great win. Now, of course, it came back down again, but that was still your initial movement. Carnival, you had it come up about 182%. Okay. And Norwegian, got it marked off because I was expecting it to come up. Well, it came up about 300%. So Royal, 400% off the low. Norwegian, 360% off the low. Close, but Royal's still winning. And then Carnival, just 168 dog crap. Now, what a lot of people did, or what I remember someone asking me if they should do. Now, they actually own Royal Caribbean, and they were asking me, well, Royal Caribbean's gone up a bunch. Should I sell my Royal Caribbean and buy Norwegian or Carnival because it's cheaper? Wrong. That is one of those human sentiments that you get into that's like, oh, well, I should buy the thing that's cheaper. No, you buy the thing that's better. And so in said time, from the 400% to 360% to 168%, you knew which one was stronger. Don't worry about the share price. That's just your human monkey brain telling you, "Ooh, I want these apples for cheaper." No. Ignore your monkey brain. Use your higher stock brain. Stronger company. And so the person that tried to get Norwegian because it was cheaper, well, now they're only up about 157%. The person that bought Carnival because it was even cheaper at $9.60, that's really cheap. They're only up 135%. But the person that bought the strongest, even though it was the most expensive, is now up 1,100%. So when you ask about RSG, let's just say that we want to pick it up back in the bottom of 2023. January 2023, RSG is up 93%. I hope I'm right about this. Bottom in 2023, Waste Management is up 67%. Am I wrong? Did I just completely negate myself? RSG 93. Okay, I'm wrong. You're right. But the premise about the premise still stands. That's not what you said. You didn't say you wanted it cheaper, but waste management just always done me well. So, yeah. Pay more non-financial question. What advice do you give to trade that's down 50%? You close it. You close it. What do you want me to say? Do you want me to tell you you hold on to it until it gets worse? Or do you just do I give you the unclely, the fatherly, the anyone would tell you advice? Stop it. And wants to walk away for a couple of months. Do you think waiting for rate? No, you're looking for some kind of hope. You're coming to ask me. And I'm not going to bullshit you. Look, the worst thing that can happen is it come back on you. I know you think the best thing is you can get to break even and you get your money out. No, that's not the best. That's the worst thing that can happen to you. You know why? Because you're going to learn no lesson from this. You're just going to do it again. So you either take the pain now, get some good sleep. You'll sleep a lot better when you do. And then come back fresh and look for a better place to put that capital instead of being married to it and expecting for it to give it back to you. It doesn't care about your account, whatever it is. I don't even know what it is. Don't need to know. You're not trading the markets. You're trading yourself. I've dealt with that this week. I felt like I've done some bad things, but you know what? I was in some losing positions this week. I even made a mistake, that CrowdStrike mistake. As soon as you realize you made a mistake, get out. Get out. There's nothing else you can do. Because you always have to ask, not will this come back? You need to ask, is this the best place for my capital to be? And if you're just sitting there in this thing that's just bleeding, that's not the best place to be. You'd be better off in cash, earning 3%. It's just, again, this is monkey brain versus human trader brain that needs to be separated. You know, you have this thing, you have this sunk cost fallacy. You need this thing to make it back for you. This is one of the quintessential errors of trading and investing, is waiting for that thing to get out, when really the answer can very often be you'd be better off, in a money market account right now. It's better to earn 3% than lose another 20, 30, 50%. Don't even need to know what it is, because you're not trading that asset. That ticker doesn't matter. It's just numbers on a screen. It's just a glowing rectangle. It's not real. It's only real in your head, the feeling about it. But the reality is it's just going to keep hurting you. And if it does come back, it's going to teach you a bad habit. You got to take the pain. Embrace the pain. Take it. Just rip it off. You're still alive. You're still on the internet. You're good. You get your bills paid. Your electricity's on. You'll be okay. Just take it as tuition. For example, if you look at the monthly Ichimoku Cloud no. Is it Bitcoin? Is it Bitcoin? I mean, I can give you some coke and tell you that I'm long. Bro, like, learn from this. Learn. Just taking a break, by the way, your second point, totally valid. Maybe that's the best thing to do. But the problem is, no, so many people, they've got an app on their phone, their damn home screen, their lock screen literally has a Bitcoin ticker. I know people that have in every room of their house a Bitcoin price ticker, reminding them every day in their place where they should be zen and calm that this financial asset is hurting them. It's not good. That's not healthy. Like, if you can actually sit down and walk away from it, then do that. But I don't think a lot of people can, and that's why taking off the Band-Aid is usually the best thing, because then your mind's free. you can make a better decision. Right now, any decision you make about it's going to be wrong because you're emotional. Lulu, good luck, buddy. Good luck. I wish everybody the best of luck. Just because I'm bearish on something doesn't mean I want you or anyone to make money. The exact opposite. I want everyone to be. That's why I do this. I want people to be successful. I want people to learn from my mistakes if they can. I want to give them good, actionable advice. I want to help. Hop on Discord and talk to me. By the way, if you do like this, I'm about to close it out. Like, share, subscribe, all that good stuff. Please, thank you, so that I can help more people. Enjoy Discord where I post things in real time. But yeah, I'm here to help. I'm here to give back. Otherwise, I'm just sitting here trading on a screen by myself. That's boring. That's boring. I like talking to people. I like talking to traders. My motto on TradingView is I want to be the person that I needed to meet 10 years ago, because I met a lot of scammers. I met a lot of gurus. I am not a guru. I am just a trader that manages my own money. And so far, I've been able to make a good life out of it. And I'm always trying to get better. Always feeling like there's more to learn, because there is. That's a volume profile level there, but you got a better one, a little bit lower on Lulu. Lululemon, just to kind of, I don't like to talk narratives or anything, but this is it's a good hold on there. That's a good price structure there, at 170, 162. This is a luxury good. Yeah, I've been actually, it's kind of a tangent here, but I'd be interested to see if the Becky index comes back into to favor. The Becky index was the companies that white girls buy. Was very, very popular in the late teens up until 2021. It's basically consumer discretionary. And so if I was going to kind of chart or basically look for, I mean, the price level there, 170, 162, that's good. If you want to, you can. I'm not particularly interested in it. I got other things. I'm kind of deployed now, honestly, for the year. We're getting into the, I've got one more big trade to make this month. You got to get all your stuff in deployed Q1, because as they say, sell in May, but it is actually statistically seasonally significant. The middle months are shit trading and shit movements. You got to make your positions like everyone else in the first part of the year, and then you got to close it, maybe put some on in the last part of the year. And so we only got a couple more weeks of Q1. So this is the time to be positioning yourself. But consumer discretionary luxury goods, you can call it, they start to lead off of the market bottom, just like tech. And so it's a little far out before consumer discretionary stuff is going to look for. I have been, of course, the last year I was looking for healthcare, because that's of course going to be the sector rotation that comes after this hop out of energy, as we're seeing right now with energy, materials, industrials, and consumer staples. And so that's one reason I'm kind of hanging on to my UNH, is the relative performance that I would expect to happen as the market begins to turn over. But when the market bottoms, that's when you really want to start looking for tech again and consumer discretionary like Lululemon. But it's at a pretty good level now. It's just I'm not particularly interested in that sector right now. You're welcome, Tubby. All right. BMNR, last ones. I've had a good week. I hope you guys, I'm sorry if you guys have had any bad weeks, but I've had a good one this week. A lot of good work put in my bot, my scanner. A lot of stuff is coming up. Bitmine Immersion Technologies. Bro, like, no, just no. Unrelated. With your trading system, at what point would you have been going back long in Carvana? We mean back long. I mean, I think here's a good level on Carvana. So it would be, yeah, I mean, you know where you're wrong here. Like I said, it's got a spike here on the 2 hour. That lets me know where the low is in response to this level. That was on Tuesday of this week. And so if it breaks last Tuesday's low, I mean, this is the level. Boom, the 319, 317, you can see price respecting it. They tried to flush it and they failed. So you know that you need to get out below that low. Fixes your risk, tells you when you're wrong, keeps you from being down 50%. That's the real key. I mean, it's not magic. It's not like, oh, just predicts the future. No, it gives you a get out signal. And then if you preserve that capital, you don't get yourself down 50%. You've now got that 50% to put into something else to grow. And that's how you win. Just forget the astrology for men part of technical analysis. It's really about protecting capital and being in something before it has a chance to move. Especially when it's doing this. All right. Could you do a stream on your real estate investment? It's not really a stream. I have 3 rental properties. People call me when the toilet breaks. I'm handy enough to fix that. 2 of them are cash flowing pretty good because I've owned them for a while. One of them is kind of like razor thin. I wanted to cash in. I wanted to capture that, low interest rate a couple of years ago. But rent prices haven't gone up very much, but I'm getting a little bit of appreciation. There's my real estate investment stream. Am I buying real estate right now? I'll give you an answer to that. No. Well, okay. But I actually did. I just bought a house for myself. So I'm not bearish on real estate at all, but it was also a place for me to live. It's a little farm, I don't want to call it a homestead because all my doomer friends have started homesteading because they think that the world is ending. But that's more of a age related thing when men, I'm generalizing here, but men start to get in their 40s. It's sort of a midlife crisis, but it's not. Midlife crisis is more you kind of, but it is. It's 2 ways of basically acknowledging your impending mortality. It's like a memento mori. I'm really riffing here, but people don't want to acknowledge that their end is coming, and so they start to perceive that the world is ending. That's why you get all this doomerism with the markets. And so they start, and so I've just noticed this in my Gen X friends. They've all gone out to the country and started growing chickens and stuff. I just want chickens because I had them as a kid. And I like to grow stuff. It makes me feel good. It's kind of like a dog likes to chase, a toy when you throw it. My family ancestors, farmers. So it's like just in my nature. I want to grow stuff. So I did buy that. I did buy that earlier this year. A house for myself with land, about 4.5 acres. Yeah, pretty good nice size to manage. But and then I have 3 rental properties. That's my live stream for real estate. Am I buying more rental properties right now? No. But what I bring up here is the Case-Shiller index adjusted for inflation. If you don't adjust it for inflation, the Case-Shiller index, that's the home prices for the whole United States, which all real estate is local. So, but just to give you an idea of what house prices are doing, they're going up, obviously, but when you adjust that for inflation, it actually tells a much more, I say, accurate story. The purple line is the actual number itself, okay? And so what price has basically done, and since the high of June of 2022 is just consolidated. Houses are not going up. Houses are not going down. World is not ending, nor are people really making a lot of money in real estate right now, at least not in appreciation. And rent prices haven't been going up. So having rentals isn't all that great. And Airbnbs are a point of oversaturation. So I don't think you're going to be making much money on that. Plus, you got the hassle of having to deal with it. So real estate was really fun if you remember, people were teaching classes on how to get into real estate back in 2020, 2021, because you had the animal spirits of people wanting a vacation. So it was driving the price of Airbnbs up. Interest rates were super low. Here's another little piece of advice for you guys. Whenever people are teaching classes on how to get rich doing something, that is not the time to do the thing. That's going to be a rule for your rest of your life, no matter what it is, whether it's crypto, real estate, or the next thing. When people are teaching classes on how to do the financial thing to make money, don't do the financial thing to make money. It's a rule. Remember that. If you remember anything from the stream, remember that. But one thing I've been watching, because I am an astrologer for men, is the TA, the technical analysis of the inflation adjusted Case-Shiller index. If we're going to make any kind of guess on where the trend is going. And this has consolidated long enough. We just had a print here for, looks like January. So they print these about, I think, 2 months late, maybe. So we're going to see what it is coming into February. Wait, hold on. Yeah, monthly. There's our January. So our February is going to come. But if we do just a simple moving average, we can see that the last time this flipped down, well, we get doomery here. Doomerism was September 07, when you actually had a turn to bring it down. Now, of course, moving averages, they're just trend following. And we don't have, it's not like we have a rich history of price action to really go on. But again, back in July of 1990 was when you had the crossover, red 12 period to 24. In other words, 12 month to 24 trend, 1 to 2 year trend. And then when it flipped back again, that was 1997. And then 07, it flipped bearish. And then in 2013, that would have been the time to buy. I bought my house in 2009, so I definitely didn't catch the bottom. I actually had to still, but I bought a house. I was living in it. And now, as of January, as of this print, the 1 and 2 year Case-Shiller inflation adjusted index has flipped to the negative. This sounds like a engagement-based post, but also informative that I need to make. I'll do that next week, because I have been watching this, and thank you for asking me about it. Yeah. So, all right, I'm spent. Thanks, guys, for hanging out. Again, if you guys like this, do the engagement thing. But I think most of you guys are my friends, and you're here all the time, so you've already done it. But I'm do it again, and we'll see you on Discord. Ask me questions, and hope you got some value. That's what I'm here for. So have a good weekend, everybody. Talk to you later.